The real estate market has long been regarded as a safe and profitable investment. But why in the world does one of the wealthiest people in the world avoid such investments? Warren Buffett, CEO of Berkshire Hathaway Inc., has repeatedly expressed his disapproval of the real estate market. And today, we will find out why. Does Warren Buffett know something about the real estate market that the rest of the world is blind about? Stick around and find out. Thanks for your continued support of our videos. Let's dive right into it. Warren Buffett's stance on blockchain technologies and cryptocurrencies like Bitcoin draws a lot of criticism. He thinks Bitcoin is a useless commodity because it doesn't generate anything, and has said he wouldn't pay $25 to acquire all the Bitcoin in existence, despite the fact that its market valuation has surpassed $1 trillion and was once at a price of over $60,000 per coin. Buffett, on the other hand, considers that to be absolutely ridiculous. He has been known to be quite critical of cutting-edge technologies in the past, so this is hardly surprising. If you remember the dot-com bubble, he felt the same way about online businesses back then. Bill Gates, who is a close personal friend of Buffett, made numerous attempts to persuade him to invest in technology businesses like Microsoft, but each and every time, he gave the same response. He has passed up numerous profitable investments, such as those presented by Amazon, Netflix, and Tesla, among others. At a minimum, the size of each of these companies increased by a few %1,000%. If you invested $1,000 in Tesla when it first went public, you would have almost $225,000 now. A $5,000 purchase of Tesla stocks would have generated $1 million. Investing a few $1,000,000 in each of these businesses back a few years ago would have resulted in a return of at least several $100 million today. Even as the country enters a crisis and the stock market plummets, Buffett's net worth is nearly $100 billion. This is irrespective of the fact that he has wasted numerous investment opportunities. In fact, he surpassed Bill Gates to become the world's wealthiest individual in 2008, when the economy was in a tailspin. However, Warren Buffett has consistently shunned the real estate market in addition to cryptocurrencies, technologies, and NFTs. You read that right. Warren Buffett doesn't participate in the real estate market. His home in Omaha, Nebraska, which he acquired in 1958 for $31,500, is the only piece of real estate he has ever owned, about $285,000 as of the year 2022. The obvious next thing to ask is why the person who has had the most successful investments in history chooses not to make a real estate investment. Despite being the most secure investment option, why does he shy away from the property? Is there anything that Warren Buffett is aware of that we are not? All of these and numerous other questions will be addressed. It's a fair game to trash Warren Buffett's investment choices. That does not alter the fact that his unwavering dedication to his technique is what got him the most successful investor title in the history of the world, outperforming the S&P 500 by 84% through the past 20 years. He has been an active investor in the stock market for what seems like eons. When asked about his opinion on real estate investments, Warren Buffett was direct and unwavering. If you intend to settle down for a considerable amount of time, buy a property. According to him, a mortgage with 30 years of payments is an ideal financial tool. Why does he never put any of his money into real estate if it's such a good opportunity to make money? Warren Buffett was withholding a huge fortune after the housing bubble burst. At the same time, he knew that the property market would eventually rebound. Why then did he not put his money into real estate? Many factors contribute to this decision. Let's begin with the very first. Putting money into real estate does not work the same way as putting money into the stock market. The management of a property is a job that requires one's whole time and attention. Perhaps the ownership of a single piece of real estate is not a major concern, especially when seen as a supplementary source of income. But once you have several properties, it becomes a full-time job. The mere fact that you own a house does not guarantee that you can always rent it out. However, even if you don't rent it out, you must continue your mortgage payments. The second issue is that something is always breaking. Because a property needs maintenance, it's possible that you can rent it out for longer lengths of time when there is a crisis. That does not signify that property is a poor choice for a business. Simply put, it indicates that you are running a business, which necessitates devoting a proportionate amount of your time to its management. For this reason, Warren Buffett has never invested in real estate, as he is aware that if he did so, he would have significantly less time to seek out excellent opportunities. Warren Buffett, for the record, made some real estate investments early in his career, but has focused primarily on rate investments since then. He actually holds a sizable amount of Store Capital Corp. This real estate investment trust operates on the stock market in the United States. Purchasing them is similar to purchasing stocks. The third and last reason why Buffett stays away from the real estate market is that finding a good deal is extremely challenging. The key to making a smart investment is to locate a wonderful company that is being undervalued or, for whatever reason, priced below what it would actually cost. Perhaps it's a company with a solid groundwork that allows for rapid expansion. Another possibility is that it has created a technology that, when mass-produced, will yield enormous revenues. Stocks on the market are frequently mispriced, particularly when there is a crisis. When investors get scared and start selling, it leads to a market crash. Investors become alarmed by interest rate increases and begin to sell off their stocks in large quantities, causing the prices of Apple, for example, to drop by about 25% between April and June. Is it true that Apple laid off 25% of its staff in just a few short months? Have sales really dropped by 25% in only a few months? No, the market fell as a result of the fear of investors. This means that not even the best businesses are immune to the effects of panic sell-offs. Because of this, it is a lot simpler to come across a fantastic offer in the stock market as opposed to the real estate market. For starters, real estate values often don't change at all that frequently. True, real estate bubbles and busts occur occasionally, but often just once every 20 years or so. Additionally, if there is a fantastic deal available on the market, a real estate agent who specializes in that region will probably clinch the transaction for himself before anybody else finds out about it. The concept of browsing several properties from the convenience of one's office is not available in real estate, unlike the stock market. Since listing a company's stocks on a public exchange involves a more rigorous and time-consuming approval process than buying a piece of land, it is not a simple endeavor. Additionally, they are mandated to release quarterly financial statements, giving Buffett a leg up on the competition when it comes to locating excellent bargains. Generally speaking, real estate doesn't give much to customers. All it does is give them a place to sleep. To be sure, it has the potential to improve things, but I doubt many people would pay more than $10,000 a night for the privilege. A company, on the other hand, has limitless potential for expansion. In 2018, Buffett spent $36 billion to purchase a 5% stake in Apple. In just a few years, his initial investment of $36 billion rose to $160 billion as Apple's market cap surpassed $3 trillion. Additionally, he has profited from Apple's consistent payouts, which have totaled a yearly average of almost $775 million. He could not have possibly accomplished such a feat in the real estate market. That is not even the finest offer he could get. The fourth point is that there is simply more money to be earned in the stock market as opposed to the property sector. It is an undeniable fact. As of the year 2021, the estimated value of the US real estate market is $3.7 trillion. Stocks, on the other hand, are worth roughly $93 trillion. Comparatively speaking, the stock market is significantly larger than the property market. Because of this, none of the world's wealthiest individuals are involved in the real estate industry. Every single one of them has created something new or launched a successful enterprise. Buffett recognizes that there are several chances in the stock market, so he is focused on making the most of the time he has available and the talents he possesses in stock investments. If he can profit more than $100 billion through stock market investments, why go into real estate? His dedication to his techniques and ideals was what first contributed to his success. He never changed investments just because they were popular. Perhaps the most significant lesson we can take away from him is that if you intend to stay there for an extended period of time, purchasing a home is a wise choice. However, real estate investing is a business. The question now is, do you wish to launch such a company? If you answered no, then you shouldn't waste your time starting a business in that field. What are your thoughts on the real estate market? Would you ever consider investing in it? Give us your insights in the comment section down below. If you enjoyed this video, give us a like and subscribe.